Good morning. This is Bloomberg Daybreak Europe. Happy Thursday. I'm Tom McKenzie in London. These are the stories that set your agenda. Markets bet on lower US interest rates after a report President Trump could be just months away from naming his choice for the next chair of the Federal Reserve. Tech stocks get a boost as Nvidia shares hit an all-time high on renewed confidence that the AI arms race is set to continue. Plus, Donald Trump says the US will meet with Iran next week as he celebrates success at the NATO summit, but threatens higher tariffs on Spain. Let's get to the market action then. It's really about the dollar story today. But before we get there, European futures currently pointing a little higher, up 0.1% after European stocks closed lower by 0.7 yesterday. And the IBEX in Spain was under pressure on these comments from President Trump that he would be looking at additional tariffs on Spain. Exactly how that would work out is a key question, of course. But we know we are counting down to that deadline, July the 9th, in terms of European discussions and other trading nations discussions with the Trump administration about the tariff regime. FTSE 100 futures currently pointing lower by 0.2% here in the UK. S&P E-minis currently pointing to gains of about 0.1%. A bit of a flat close, essentially, for US stocks yesterday. Nasdaq 100 futures looking to add 40 points so far, up 0.2%. The Nvidia story is front and centre, of course, in terms of that AI demand. It is now the largest stock by market cap stateside. Let's flip the board and have a look cross-asset then. I talked about the dollar. It's under pressure again in the session today, giving the euro a lift. Euro's at 116, up 0.1%. The 10-year yields coming down again, 2 basis points in terms of yields lower. A similar move to yesterday, continuing that grind lower on yields on the benchmark 10-year. 427, the Wall Street Journal reporting that potentially President Trump could pull forward his announcement potentially to September of the next Fed chair, creating potentially a lame duck scenario for Fed Chair Jay Powell, whose term ends in May. Brent, $67, quite close to $68 a barrel on Brent. A second day of gains, up 0.4% on oil. We keep an eye, of course, on the Middle East. Gold at 3,333, just flat right now on the yellow metal in that safe haven, of course. In terms of what is percolating through the Asian markets, big focus on Hong Kong and action there around the currency. Let's cross over to Min Lo, who is standing by for us in Hong Kong with a check on that story and the broader Asia market moves.
Hey, Tom, as you said, it's a dollar story today, and the weakness in the dollar has been impacting the Hong Kong dollar as well, which has been trading for a while at the higher bound of the permitted trading range, 7.85 per dollar. That prompted the Hong Kong Monetary Authority, or HKMA, to buy $1.2 billion US worth of local currency today. But look where we were, the red circle there just a month ago. We were at the opposite end of the range. The HKMA also intervened then in the opposite direction, injecting tons of liquidity into the markets here, and that's driven down the interest rates. You look at the HIBOR, we were for a while not too far away from zero. Today, flip the chart please, we saw a little bit of a bump today because of the intervention. There you go. And because of the weakness in the HIBOR here, the interest rate differentials between Hong Kong dollar and US dollar, that's led to the carry trade taking hold, because we have been seeing one of the most profitable carry trade last month that continues to put pressure on the Hong Kong dollar. So that's the currency story. Flip the board, take a look at how Asian markets are doing, and the benchmark has been trading higher today, led by the Nikkei 225, and the big story is the Nvidia story overnight, hitting record high. And so we saw a follow through here in Asia with the Nvidia suppliers, things like SK Hynix, TSMC leading gains here, and so that's lifting the TAIEX as well. The Kospi, though, seeing quite a bit of profit taking here, given that it's been one of the best performing indexes here in Asia, up about 27% year to date so far. Take a look at how Chinese and Hong Kong stocks are doing. Chinese onshore stocks, not a whole lot of movement. Flip the board, please. Not a whole lot of movement on the CSI 300, not a lot of drivers here, but watch the Hong Kong property index at the bottom of your screen, down 1.6%. That's because of the HKMA intervention driving up interest rates. That's bad for the property sector, and that's dragging down the Hang Seng index as well.
OK, great breakdown of what is happening, of course, the Asian markets for us today, with a focus, of course, on what is the de facto, of course, central bank in Hong Kong and that intervention, minimum low in Hong Kong. Thank you. Markets, of course, weighing as well. Comments from President Trump, as we mentioned, that he has a short list of candidates in mind to succeed Fed Chair Jerome Powell. The Wall Street Journal is reporting that Trump could reveal the next central bank chief by September or October, even though Powell's term runs for another 11 months until May, of course, of 2026. Sources say some of Trump's allies have pushed for Treasury Secretary Scott Bessent to get the job. The president has been pressuring Powell to lower rates by 2.5 points and took another jab at him while speaking at the NATO summit yesterday.
Yeah, I know within 3 or 4 people who I'm going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. We have no inflation. We have a tremendous economy.
Let's bring in Bloomberg's Valerie Teitel then for the market response to this. We're seeing the softer dollar in the session. Talk us through, Valerie, how markets are thinking in terms of repricing potentially about over a more dovish Fed if we get this announcement.
Yeah, that's right. And hearing from Trump yesterday at that NATO press conference, talking about the 3 to 4 names that he has shortlisted. The ones that are currently in the mix in the market's minds are Kevin Warsh. He's a former Fed governor. He was considered for Treasury Secretary early in Trump's term. Kevin Hassett, who's currently the National Economic Council director, one of the key, backers of Trump's economic agenda, and Scott Bessent, we've heard about quite often, current U.S. Treasury Secretary. These are the kind of popular names that are in the mix, all of them seen by the market as being dovish and being supportive of Trump's economic agenda. And that has led to dollar weakness. We're seeing Treasuries rally as we price in a more dovish Fed chair coming next year. And this dollar weakness is leading currencies to have quite a fantastic session overnight. If we can flip the board on, I can just talk about how we have seen the euro dollar breach the 117 handle, Tom. That's not something we've seen since 2021. We also saw cable reach the highs that it's seen since 2021. So this is really igniting another round of dollar weakness. We can flip the board and just check at how the U.S. dollar has been acting this week. We are on quite a slide, a 4-day losing streak for the Bloomberg Dollar Spot Index, down over 1%. And this is really key, Tom, here, because the dollar had been supported by the risk-off move, by those worries in the Middle East, and that is really coming to a swift end this week.
OK, a 4-day slide in the dollar. Consequences, of course, for the euro and the pound, as you say. Valerie, we're getting details as well around potential changes to the capital requirements for the banking sector, the big banks in the U.S. To what extent are they going to welcome these potential adjustments around these rules?
Well, the Federal Reserve voted yesterday on this proposal that was widely leaked to the media a few weeks ago. No real surprises within the proposal. They do want to lower the SLR by about 1.5 percentage points. There is no carve out for the Treasury market. Unfortunately, that was something that maybe these Treasury market intermediaries did want to see. There were 2 dissents on the vote, Tom. Those 2 both claiming that the benefits to the Treasury market are not outweighed by the broader risk to the banking system by lowering Tier 1 capital by this much. It is going to move to a 60-day public comment period. Both the FDIC and the OCC, those other 2 important banking regulations, have released parallel proposals at the same time. So it does seem to be all 3 of these banking regulators are on the same page with relaxing these capital rules. OK, and we'll see if they get that carve-out ultimately for Treasuries. Bloomberg's Valerie Teitel on the proposed adjustments around capital rules for some of the biggest lenders in the US. Thank you. And, of course, how the markets have been digesting the news around the potential announcement of the next heads of the Federal Reserve. Meanwhile, EU leaders meet in Brussels today for a crucial summit. The summits just keep coming thick and fast, don't they, after NATO yesterday. On the agenda, Ukraine and the Middle East and, of course, defence. The meeting, as I mentioned, coming right after NATO leaders agreed to increase defence spending to 5% of GDP in a win for US President Donald Trump. However, one nation came under fire from him for holding out.
You know, Spain is the only country that... Are you from Spain?
Yeah.
Good, congratulations. You're the only country that is not paying. I don't know what the problem is. I think it's too bad. So we'll make it up. You know what we're going to do? We're negotiating with Spain on a trade deal. We're going to make them pay twice as much. And I'm actually serious about that.
Well, that threat from President Trump put Spain's IBEX under pressure, with the stock market seeing its worst performance since April Let's go to Bloomberg's Oliver Crook, who, of course, was covering the NATO summit for us. Ollie, break down the details then from the NATO talks and the ire directed not just by President Trump, but others at Spain.
Well, I think the issue with Spain really highlights the fundamental issue you're going to see going forward with this European continent now that there is this sort of new paradigm of 5% of GDP that is going to go towards defense spending. I mean, it's closer really to 3.5% because that other 1.5% can be fudged and kind of just recategorizing spending you'd be doing anyway. But still, we're talking about, you know, on average, more than doubling the defense budgets across Europe. And that is going to make some very difficult decisions for a number of governments, namely ones that really want to preserve their welfare state, as the socialist in Spain does, Pedro Sanchez, and that is going to speak to a number of issues that these countries are going to have across the board. That being said, Tom, you know, we think about kind of when we cover the news, kind of moments in our coverage, what is going to be a sort of historic moment and really shifting the priorities for the narrative going forward. And I have to say, what we got yesterday out of the NATO defense meeting is probably one of those moments where you're going to have to see a really fundamental restructuring of how governments spend their money, how industry is situated all across Europe, and that really begins yesterday and begins sort of going forward. I mean, I spoke to the president of Finland just moments after the decision had been reached, and we just use him as an example. 3 years before, he was not president. He had retired from politics. Finland was not a member of NATO, and he said that if you had told him all of these things would be the case and that Finland would be spending 5% of its GDP on defense, he would have told you to go see a doctor. So effectively, what Trump has done is gone and basically brought into reality something that a few years ago and even 6 months ago was considered basically totally inconceivable, and probably what is going to be considered one of Trump's biggest foreign policy once he's taken office and potentially going forward.
And now the action, of course, Ollie, with that context, moves to the EU leaders meeting in Brussels, where you are, with the euro in focus.
Yeah. Yeah, I mean, the euro, we were seeing, is doing exceptionally well against the dollar. You've just been highlighting the sort of dollar weakness that we've been seeing across the board. I think we're at the highest level on the euro. We're almost at 117. That's a number we have not seen in a very long time. But I think for the European leaders here, what they're going to be mostly focused on is trying to get resolution on these trade negotiations with the United States. From all the reporting we've been doing, things are not going terribly well. And Tom, we're what, 2 weeks away from that deadline of July the 9th when we get 50% tariffs imposed by the United States on the European Union in the absence of a deal. Some of our reporting suggests that, you know, the EU still does not have a clear idea of what the United States wants. Others say that basically they're imposing unilateral demands that are not necessarily focused on trade. So I think for the EU leaders, what they need to do today is to have a conversation about how they're going to approach this. We've heard from some member states who say, even if you get that baseline 10% tariff from the United States, that would be enough to provoke retaliation from the EU. That, of course, worries other member states who say, listen, a fast kind of decent deal is better than no deal at all. So that's going to be, I think, one of the big debates before European leaders today as they assemble in Brussels.
OK, Bloomberg's Oliver Crook in Brussels ahead of that EU leaders meeting. Ollie, thank you. And of course, as Oliver mentioned, he's been speaking to the president of Finland, who told him the NATO summit was a great success. Alexander Stubb also said the US president should be pleased with what he'd managed to achieve.
In my intervention around the table there, I said that had someone told me 3 years ago that Finland will be around the NATO table, I will be around the NATO table, and that we would be spending 5% on defense, I would have said, go and see a doctor. But here we are 3 years later. And I think this meeting was historic for at least 3 reasons. The first one is that we basically went back to the basics of what the alliance is all about, a deterrence toward Russia. So that's going back to 1949. The second one is that we increased our defense expenditure 5%. That's pretty much Cold War type of figures. And the third one is kind of the building of a new NATO, so it's more balanced and probably more European. So the outcome, I think, was a great success for the whole alliance.
And do you think it is solid enough, that there's not enough wiggle room for the 10-year mark, that maybe some of the countries that are a bit reticent to spend, like Spain, for example, are trying to find a way to kind of delay that and maybe get around some of these targets?
It's solid enough. Yeah. So basically what happens is that you set a target, and after that you review those targets through capabilities every year. Technical terms, it's called NDPP. So every member state has to fulfill the targets that have been set, and I'm quite convinced that the alliance, Secure, and the military staff in general will make sure that the member states do their part.
And you were just sitting with Donald Trump. What was your impression about sort of what his feeling is about NATO, and do you think that this puts the debate about Article 5, whether or not the United States will rise to it, to rest?
Yeah, my interpretation is that the President President of the United States was very pleased, and he should be, because he has pushed a lot of the allies to increase their defense expenditure and find a new balance in this. And of course, coming from a small country bordering Russia, I'm also pleased. So, and I think, the question about Article 5 is a non-question. It is, all for one for all, and we're all committed to that. That's what the alliance is all about.
And what came up a lot with the press conference that Donald Trump held a little bit earlier was the sort of situation in Iran, whether or not the nuclear capabilities were fully obliterated. Have you seen any intelligence that supports or rejects that at this stage?
No, I mean, it's 6 of one, half a dozen of the other. I think the main takeaway from that attack was that it then brokered a ceasefire, and that's what we are focused on right now. Then it is up to, the IAEA to assess what the destruction level of the nuclear capacity of Iran was. But this wasn't really discussed around the table, apart from the big picture that the strike had been a success.
The Finnish President, Alexander Stubb, speaking to Bloomberg's Oliver Crook. Coming up, Nvidia back on top. Shares of the AI firm rising to a record on bullish comments from CEO Jensen Huang. But is the rally sustainable? We're digging into that story with AI back in focus. This is Bloomberg. We're also going to be joined, by the way, before I close out, by the co-founder of one of Bloomberg's 25 European startups to watch. That conversation on AI coming later today. So getting granular on AI with Eléonore Crespo, the CEO of one of the most valuable European startups with that big focus on AI. That conversation coming up later in the show. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Nvidia shares rising to an all-time high as Chief Executive Officer Jensen Huang reassured investors at a shareholder meeting that demand for artificial intelligence chips remains strong. Charlie Wales is here to talk us through it. So what is behind the latest rally from Nvidia? It's up 60% since April, Charlie. So it's not all down to what happened yesterday. But yesterday was another propellant. It was up, 4% or so in the session?
Yeah, so another propellant. And really, I think the question here is this sustainable, right? Is this some sort of relief rally? What do we have here? Because we all know AI is booming. But, I think looking at these individual companies, the question is, can this continue? And look, we got these bullish comments from Huang yesterday. But of course, the CEO is going to make bullish comments about the performance of the company. I think there is evidence of, some fundamental kind of ballasts here for Nvidia that could keep this rally going. When you look at some of the earnings reports that we've been able to digest over the past couple weeks from some of these big tech companies, from Microsoft, from Meta, from Alphabet and Amazon, those represent 40% of revenue for Nvidia. And what we've been seeing in these reports is their spend on AI is really strong. And so that is really bolstering Nvidia. We've also seen, price to earnings for Nvidia is actually pretty attractive. So it's about 31 times forward earnings for Nvidia. If you compare that to NASDAQ 100, that's 27 times. So they're pretty close, despite the fact that we have all of these analysts expecting significant growth for Nvidia. And then thinking about who owns Nvidia, about 74% of long-only funds own Nvidia. When you compare that to Microsoft, it's 91%. So there are all of these kind of features out there in the market right now pointing to this fact that there could be room to run for Nvidia. We know, of course, AI is growing, but it's these kind of fundamentals under the hood that are really helpful here.
Yeah, Nvidia taking the crown from Microsoft yesterday in terms of becoming the most valuable stock in terms of market cap. And of course, a key question for analysts had been to 25, which seemed to be locked in terms of the spend on AI. And the question was 2026 shaping up to be a similar story or a slowdown? It seems like this is suggesting that spend continues in 2026. We also got some numbers and some lines from Micron. What was the story there?
So look, they had their earnings report yesterday, and this has been Wall Street's favorite chip maker, best performer in that Philadelphia Semiconductor Index. But I think kind of what happened yesterday, their share price really went for a ride. And I think it will be a familiar story for any high-achieving honors student, where you come home with a really great report, you beat expectations, expectations on multiple fronts. You show the promise of growth, but it's just not good enough. And so that's basically what was happening with investors yesterday, where they liked what they saw as far as the beating of expectations, but the growth prospects, especially for this high bandwidth memory that is so important for AI, they just didn't think it was good enough, even though it was really strong.
Well, I like that we just got a window into your student life, Charlie, your previous life as a student, as the honours student, never, always achieving, but never quite good enough.
Just like Micron, just like me, exactly.
Yeah. Charlie Wells, thank you very much on the story around Nvidia, Micron, and overachieving honours students. Coming up, a sneak peek at Xiaomi's first electric SUV, billed as a direct rival to Tesla's Model Y. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. President Trump's tariffs are putting unprecedented levels of stress on Chinese manufacturers, of course, and Bloomberg has visited one toy factory in Shenzhen to find out how it is dealing with the on-again, off-again trade war. Our China correspondent, Min Lo, reports.
The Barbie blow dryers and vanity kits, as well as these game sets, are just some of the toys made at this factory and shipped to the United States and around the world. Manufacturers are rushing to ship the goods as quickly as possible to avoid President Trump's tariffs on China.
The tariff impact on our industry is big, especially for companies like ours, where the majority of clients are based in the U.S.
Thousands of factories in China have been caught up in the trade war. America's largest toy maker, Mattel, has warned tariffs on China could lead to higher prices for consumers, with President Trump threatening the company directly.
They said, well, we're going to go counter. We're going to try going someplace else. That's okay. Let him go, and we'll put 100% tariff on his toys, and he won't sell one toy in the United States, and that's their biggest market.
Illinois-based toy company Learning Resources relies heavily on Chinese manufacturing. It has filed a lawsuit against President Trump, alleging he exceeded his presidential authority. Some toy factories like Bill's are looking to move new facilities to Southeast Asia to bypass the tariffs.
We are exploring overseas opportunities. For example, we are establishing a new manufacturing base in Vietnam, which is expected to begin operations in July.
Bill says for now, his employees in Shenzhen are working overtime, taking advantage of the current US-China truce. But if Beijing and Washington can't strike a longer-lasting deal, there will be plenty of tears to go around. Min Lo, Bloomberg News.
OK, now some other stories making the news this Thursday. China's Xiaomi is set to unveil its first electric SUV today. The YU7 is billed as a direct competitor to Tesla's Model Y, with entry-level models expected to be cheaper. Xiaomi's shares have surged more than 60% this year, with the company now worth more than BYD, the leader in Chinese EVs. Shares of companies linked to New York City real estate fell after Zoran Mamdani's shock win against Andrew Cuomo in the Democratic primary for New York mayor, of course, mayor of New York City. Mamdani has promised a rent freeze in the city, as well as free childcare and cheaper groceries in government-owned shops, much of it financed by tax rises on the rich. And Shell has denied a Wall Street Journal report that it's in active talks about acquiring rival BP, saying no discussions are taking place. BP surged as much as 10% in New York on the report, but erased almost all of the gains later in the session. And Mars's $36 billion bid for Pringles chips maker Eléonore faces a potential setback. That's after the EU opened a probe over concerns the largest packaged food deal in almost a decade could thwart competition. Watchdogs will examine how Mars might increase its bargaining power in talks with retailers if it absorbs Eléonore's product line. They'll scrutinise how this may lead to higher prices at the checkout. There's plenty more coming up. Stay with us. This is Bloomberg. Good Thursday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Markets bet on lower US interest rates after a report President Trump could be just months away from naming his choice for the next chair of the Federal Reserve. Chips back on top. Nvidia reclaims its place as the world's most valuable listed company on renewed confidence the AI boom has further to run. Plus, Donald Trump says the US will meet with Iran next week as he celebrates success at the NATO summit but threatens higher tariffs on Spain. Let's get to the market story then. European markets closed lower by 0.7%, dragged lower, in fact, by the IBEX. Spanish stocks taking a hit on those comments from President Trump. Today, European 50 futures are pointing modestly higher by 0.1%. Here in the UK, FTSE 100 futures pointing to losses of 0.2. We're going to hear from Andrew Bailey later today, attending a British Chambers of Commerce summit and meeting later in the day. S&P futures stateside looking to add just 0.1%. It was a flat close for US stocks yesterday, despite the activity around Nvidia back on top again as the most valuable company by market cap stateside. Nasdaq 100 futures looking to add 38 points. Let's flip the board and have a look cross-asset. A focus on dollar weakness, yields down again on the reporting around Trump and this potential announcement, potentially as early as September, for the next Fed chair. You are seeing markets repricing as well, expectations around the Fed, partly on the back of this news. Now more than 60 basis points priced in by the end of this year and close to 25% chance of a cut for July, according to market pricing. The US benchmark 10-year is yielding 4.26, yields down 2 basis points. Euro getting a lift on dollar weakness, up 0.2% for the single currency. Brent a little stronger for the second day, up 0.3%, and gold largely unchanged. Now, President Trump says the US will meet with Iran next week, while casting doubt on the need for a diplomatic agreement on Tehran's nuclear program. Trump continues to insist that last week's US strikes on Iranian nuclear facilities had obliterated them. He says that means a diplomatic agreement may not be necessary, even though Iran has signaled its readiness to resume talks.
Now this incredible exercise of American strength has paved the way for peace with a historic ceasefire agreement late Monday, and we call it the 12-day war. Spoke to a few people. I guess that just sounded like the right name. It was a 12-day war. And we think it's over. I don't think they're going to be going back at each other. I don't think so.
Joining us now is Bloomberg Horizons Middle East and Africa anchor Germana Pesechi. Germana, what are the US's next steps then for diplomacy with Iran? What can we expect if indeed they do hold these talks next week?
Well, President Trump spent quite a little bit of time at the NATO press conference talking about Iran and giving an update on the situation there. He did mention that the U.S., he said, we are going to be having talks with Iran as soon as next week. Exactly who those we are, unclear at this point, but it does appear to be the case that U.S. and Iran will be holding direct discussions. And of course, in the run-up to this war, 5 rounds of discussions had taken place, mediated by Oman, by Qatar, in order to progress with the nuclear deal. The 6th round was supposed to take place a couple of days after the war began, but of course the 12-day war then ensued, putting back all of those discussions. Now the U.S. are expressing optimism that the two sides can find some form of an agreement. Yesterday, the special envoy Steve Witkoff in an interview said, "We are hopeful for a comprehensive peace agreement. The signs are there." But I should caveat that in that same press conference, President Trump said, we may sign an agreement, but I don't know, to me, I don't think it's necessary. And that I don't think it's necessary also is important to pick up on, because it does suggest that the U.S. do feel that they have eliminated the deterrence and Iran's ability to have any leverage in these discussions, i.e. doubling down on his claims that they had, quote, fully obliterated nuclear sites. And that is an ongoing discussion, as we spoke about yesterday, multiple conflicting pieces of evidence suggesting that there had been a setback to the nuclear ambitions, but not a full obliteration, which is how President Trump has characterized it. So it looks like we're entering into a crucial week. And perhaps the biggest takeaway here is that there is a window for diplomacy. What are the types of concessions that Iran will offer this time around? Unknown at this point.
OK, and as you say, that debate about the intelligence around the nuclear sites continues, with many suggesting the IAEA needs to be on the ground to assess. Meanwhile, Jemana, as you know, President Trump also touching on Gaza and talking about progress there. What is the latest in terms of discussions around a potential ceasefire in Gaza and the horrendous humanitarian situation?
Yeah, so, Tom, it's important to know that the fighting in Gaza never stopped. And actually, more Palestinians died in the last 12 days of the war. Over 1,000 Palestinians have died than the number of Iranians that were killed in the 12-day war, around 600 there. So the fighting still rages on. As you say, there's still a deep humanitarian crisis. But President Trump did seem to think that the ceasefire in Iran, with Iran, could yield some positive results as far as the Gaza ceasefire discussions are going. Now, you may recall that the first phase of the first ceasefire elapsed back in March. There have been several attempts since then to make a breakthrough. But one of the key stumbling blocks is the fact that Hamas officials and Israel there's one intractable point, which is the Hamas officials would like to see a ceasefire leading to a full end to the war, whereas from the Israeli perspective, they see it as a temporary ceasefire that would enable the release of what is expected to be the last 20 hostages still alive in exchange for prisoners, without fully committing to a long-standing ceasefire. So this is where things are right now. But again, Steve Witkoff, none other, the same individual who's been leading all of these discussions, is expressing optimism there. The Wall Street Journal are reporting that some of those discussions could resume in Egypt in the next couple of weeks.
OK, Bloomberg's Jemana Pasechi with an important update in terms of the situation on the ground in Gaza and conversations about a potential ceasefire there, and looking ahead to those talks between the US and Iran next week, potentially. Switching focus right now, China's $1.3 trillion wealth fund spent years as one of the world's most sought-after investors, owning massive stakes in Blackstone and Morgan Stanley. But now, China Investment Corp, or CIC, is in full retreat from the US. That is the focus of today's Big Take, and Bloomberg's Greater China Senior Executive Editor John Yu joins us with more. John, fantastic to get you on the show to talk through this Big Take. What is behind the pivot away from the US then by CIC?
Predominantly, it is the fact that the United States and China, the relationship between the world's foremost powers, is now one that is defined by competition and rivalry. And in that sort of environment, CIC is a victim, and it is also a metaphor of what we see today, in that there's this fear of decoupling, not only in trade and in economics, but often in financial markets when it comes to Wall Street and banking and investing.
So, John, what is the longer-term impact of this then on China as those flows are decoupled and CIC readjust? The impacts on China, the impacts on the US?
I think globally, the main thing at stake now is, will the United States and China now become separate regimes? Are you going to have separate technologies in each country? And other nations around the world are going to have to pick which technologies they use, which country they're friends with, which countries they trade with. And if financially that decoupling speeds up, that could amplify the decoupling in the technology space and the diplomatic space. And this is why CIC's fate is so important, because it tells us how quickly that is happening, if it will happen, and to what degree.
To some extent, the canary in the coal mine on this story, CIC, of course, and the fate of that. Bloomberg Senior Executive Editor for Greater China, John Liu, with the details. You get more, of course, well worth your time in terms of a read, the Big Take on Bloomberg.com and, of course, on the terminal. John, thank you. Now to some other stories making the news this Thursday. The chief executive at Worldline has blamed an orchestrated media campaign for the firm's precipitous share decline in an effort to dig the company out of its current crisis. On a call with analysts, he said the French payments processor had been, quote, attacked by the media. A series of articles had accused Worldline of covering up fraud by some customers, which the company denies. US authorities have accused a British man of conspiring with a group of hackers to steal data from dozens of companies and offer it for sale online. 25-year-old Kai West has been charged with 4 counts, including conspiracy to commit computer intrusions. It's alleged his actions caused more than $25 million in damage to victims around the world. The US is seeking his extradition. Coming up, the co-CEO of one of Bloomberg's 25 European tech startups to watch joins us. Eléonore Crespo from AI-powered planning and business forecasting platform Pigment will be here to talk tech. That is next. This is Bloomberg.
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Drulers in Hong Kong. I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. Premieres June 27th only on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe. Now, Bloomberg's highlighting 25 European startups to watch this year. The list includes household names as well as companies that are just emerging, breaking ground in fields including generative AI, space, autonomous vehicles and video games. We are joined now from Paris by the co-founder and co-CEO of one of them, French AI-powered planning and business forecasting platform Pigment, Eléonore Crespo, and one of the hottest startups in Europe right now. Eléonore, thank you for taking the time joining us out of the Paris studio. We've talked to you a couple of times about the tremendous growth that you and Pigment are seeing right now from your customers. I just wonder, as we think about the macroeconomic uncertainty, concerns about supply chain constraints, geopolitics, tariffs, these are all issues that your services hope to assist with. What kind of demand are you seeing right now, given this more uncertain environment that we're operating in?
Yes, so absolutely, the world is accelerating today. We see it with the macroeconomic context. We also see it with the rise of AI. And now companies are coming to us because the problem for business leaders today is that they have to make faster decisions than ever. They cannot wait months to make decisions where this macroeconomic context is so fluctuating. And so they need AI to help them solve their problem. They cannot rely on legacy platforms, on Excel spreadsheets to do business planning and to adapt to the world. And so they come to us because our AI is becoming a business partner to them to help them make fast decisions and act quickly on what's happening to them.
Okay, so they're coming to you for these services and these products. What does it mean for revenues at Pigment then, in terms of ARR and annual recurring revenue? What are you projecting as you look out towards the end of 2025?
Yeah, so we are keeping growing very fast. We are projecting to keep growing at least at a 2x rate. So we're doing really, really well. NDR is at 120%, which means that our customers are expanding. We've signed new customers in the likes of ServiceNow, for instance, very recently. And so we are making a big bet into the enterprise and into high tech. And so we'll keep growing in that direction.
Some investors I've spoken to, a number of investors this year, have talked about this year being the year of AI agents. And the last time you and I talked, Pigment had released its own AI agent. What has the response been to that, Eléonore, and what are your customers doing with it?
So since we launched, indeed, our first agent, when I came to you last time, we've got extraordinary feedback from our customers. They are doing incredible things with this first agent, which is the analyst. So basically, it's for sales, finance teams, supply chain teams to help them automate analysis. So to give you an example, every month a finance team needs to do a budget variance analysis. You can now do that completely automatically, which means some very cumbersome workflows now can be fully automated on the platform. And not only that, not only it helps teams save time, but it also unlocks for them to ask better questions and get smarter answers on things they perhaps would not have think about. So, for instance, I think that what really going to make a big change for them is that they are not going to only be able to make faster decisions, but they are going to be able to act very, very quickly on that. Whether it's when their revenue is changing, their margin is increasing, decreasing, etc., they are going to be able to act very fast on these things.
And you know, a key question, obviously, as we see the embed of AI, is what it does to the labour market. Is the adoption of your products by your clients, is it allowing them to cap headcount or reduce headcount? Are you seeing that?
So I would say what we see is more that we are trying to empower our users to do more things. So what they are trying to do with us is not necessarily to replace jobs today. It's more to empower humans to do more. It's to help them be smarter and find answers that perhaps they would not have found. It can help them detect anomalies that perhaps they would not have found. It can help them run thousands of scenarios, for instance, in parallel to find a solution to react to the macroeconomic environment or to be proactive about investments. So for us, that's really what we see today, and this is really the power of the platform.
What is, Eléonore, what is your longer-term ambition for this business? You compete on some levels with Microsoft Excel, with Workday. Some of your clients include Siemens, for example, Publicis, Snowflake. What is your ambitions for Pigment in 5-10 years' time? Are you looking to push beyond financial planning?
Absolutely. So we have a very big ambition. We want to have a large impact on this world. We want to create one of the largest software companies in the world that can impact as many business leaders as possible. So we have started with planning, but we are going to expand beyond. We want to push the boundaries, for instance, of the ERP. And what we want to do is really to be able to go from decision to action. So helping our customers create a revolution with AI, helping them take automated decisions, helping them reduce the amount of work they spend analyzing, cleaning data, and really help them focus on the smart actions and help them take also automated action at the end. So really the automated workflow, I think we can create a complete revolution in the way people think about planning, but not only, but they think about running a company in general.
What are your biggest constraints or headwinds at this point?
I think our biggest constraints are always, the fact that we want to innovate as fast as possible, and we want to keep pushing in that direction. And so, in order to do that, we need to be able, obviously, to hire fast, and we need also to be able to innovate. So, to give you an example, something that I am spending time on is making sure that we work with the European Union, for instance, on tech regulations, etc., so that we can keep innovating very, very fast from an AI standpoint, because this is going to be the game-changing revolution for all of the businesses we are serving today.
Okay, so you're working with the EU on some of these issues. What specifically does Europe need to do to have tech companies that can actually scale globally?
So I'm going to give you an anecdote. I was lucky to be with Jensen Huang from Nvidia 2 weeks ago in Paris that delivered a speech at a tech event. And he was saying that Europe needs to ship faster. They need to make decisions faster. And, we cannot do like what we do with our wine, which is making it aging and waiting for it to be better. We need to be faster. And so that means that today we have an incredible pool of talent in Europe. But what we need now on top is to be able to ship fast an infrastructure that helps us scale from an AI standpoint. And obviously that regulation doesn't work in silos, that we have the regulation with us to be able to innovate at the speed to which we need to go. And finally, I think we need to work very closely with the US. We need to work as one global world, and we need to do that really, really well and not think only European first.
Okay, we have to work with the US, even as there are concerns about the adoption of US technology and the question about sovereignty. That is your view. Eléonore, the US is an increasingly strong market for you and the team, isn't it? What, 60%? Is it North America, 60% of revenues? Ultimately, you're going to be IPOing in the US, aren't you?
Probably, yes. So I think IPO will be on our path at some point. It's not a topic for today. I think being private is amazing actually for innovation. It helps us innovate very fast. And if one day we need to go public, it will probably be in the US.
What are your ambitions in terms of the scale and size of the US market as a segment of your revenue stream?
So I think the US market will remain probably forever our largest market. It's a market that really is incredible to adopt technology. We will obviously keep pushing everywhere else in the world, but obviously US has been an amazing stream for us. And I think, it's really a market where you need to be, especially today with the rise of AI. All of, the largest companies creating AI today, our partners are in the US. And so we want to keep working and innovating with them to, serve this revolution to our customers.
Okay, co-founder and co-CEO of Pigment, Eléonore Crespo, on the need to ship products in Europe and the need to collaborate with the US when it comes to this key technology. Eléonore, thank you very much indeed. Joining us out of our Paris studio. There's plenty more coming up. We're going to break down moves around the dollar, rates expectations. Stay with us. This is Bloomberg.
We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Okay, Fed Chair Jerome Powell speaking in May about the impact of political pressure on the US central bank. And that political pressure, of course, continues with the reporting from the Wall Street Journal that President Trump is looking potentially to announce the next Fed chair nominee as soon as September. So you could have a lame duck Fed chair. His term ends in May 2026. That is one of the factors that is leading to pressure on the dollar. You're seeing that again today. Here's the historical context. The dollar is down more than 8%. Just so far in 2025. Compare that to other years where you've seen pressure on the greenback. We have not seen a move like this for quite some time. We're taking you all the way back, of course, to 2019. You've got the example of 2006 here, a drop of just 3.3%. But so far in 2025, a drop of 8.4%. That has consequences, of course. Good news maybe on the inflation front for countries like Europe, or European Union, and countries like the UK. Less good if they're exporting, of course, with strength, relative strength in those currencies then. So that story continues to adjust. What does the big, beautiful deal do to the dollar story as well? Flip the board and have a look at the Treasury story. We have, of course, this year seen a bit of a divergence in terms of the play out between higher yields and softer dollar. That is starting to reverse to some extent. So yields have been coming in lower as the dollar has started to drop. A more traditional relationship. 4.29 right now on the US benchmark 10-year. You do have some bets being placed in the markets on 4% on the 10-year. Again, the moves around what happens with this fiscal stimulus and the bills, the tax cuts and the spend out of the US will be consequential as well. But the adjustments as some of that geopolitical risk fades and that safe haven move into the dollar comes off is a story worthy of your attention. Let's flip the board and have a look what's been happening in Nvidia. Back on top, taking the crown from Microsoft in terms of the most valuable company by market cap, $3.77 trillion, close to $3.77 trillion, added $1.5 trillion just since April, gains of 60%. Jensen Huang of Nvidia speaking yesterday saying the demand for their GPUs and their AI accelerators continues. Some analysts have been worried that the spend would come through 2025 and then start to fade in 2026. The narrative seems to be, at least from Jensen Huang and team and the spending from the hyperscalers, 2026 is still a story in terms of the spend on those AI chips. Bloomberg Terminal users can access these charts and others, of course, used throughout the show at GTV. Go on the Bloomberg Terminal. We're going to bring you live coverage of the EU Leaders Summit through the day, including an interview with the European Commission's Executive Vice President, Teresa Ribera. The opening trade is up next. This is Bloomberg.